Thank you very much for having me. I'm here to add to the doom and gloom that Alicia was just outlined, so hopefully it won't be too gloomy. I wanted to start out with one quick story. I know time is rather short, but discussing shadow banking, a lot of people say, well, what is it? So here, the story is when I was in Shanghai a couple of years ago, I was researching my book on shadow banking. I met with a banker at China Merchants Bank who was offering me an investment. So I said to her, so what are you offering me? And she said, well, what returns do you want? And I said, well, it depends on what you're offering me. So we kind of went back and forth for about 10 minutes. And finally, at the end of it, she was with China Merchants Bank. She said, I think it's a bridge in Nanjing. So essentially what that means is when people ask me outside, and when I do talks in Europe and the US, what is shadow banking in China? In China, they don't really always know what they're selling and what they're buying. So if you're confused, everybody else is too. So anyway, that being said, the point of this talk is to talk about the current state of shadow banking and also say what the origins of it, what the reason why it exists, and what the future is likely to be. So I think first of all, it's crucial for China's fiscal health, a point that a lot of people don't really understand. Shadow banking is something that has helped to prop up the property market and created the debt that Alicia was talking about, and has helped create tax revenues or non-tax revenues for local governments, and that's been an extremely important part of it. It does have the potential to have a huge, essentially a run on the banks or a run on the non-banks in this case. However, there has been significant de-risking of the financial system, which has been fairly effective in the last year or so. But the third point is, and that's why I titled my book, Shadow Banking, The Rise of Capitalism, is that to some degree, shadow banking is a way for China to act quasi-capitalist because a lot of SMEs and small business rely on it for capital outside of the formal banking system. Okay, so shadow banks have migrated over the years. There's all different kinds of shadow banks. They include the trusts, which are owned by provincial governments and private investors, online P2P lenders, which get a lot of attention, but they're only about 3% of total capital flows. The state banks are actually sell shadow products, less so now than they did 2 years ago, but they do sell that. And then the regional and city banks. So shadow banks come in a lot of forms. So when you talk about what they call NBFIs and banks, it's really more of a gray area. When I think of shadow banking, the question is how close to the state are you, how close to the regulators? In the case of the trusts, China itself, the CBIRC, does not consider them to be shadow banks, but Western observers do. This is a quick chart just to explain why, to some degree, and I don't want to get too much into the history because it goes back to Zhu Rongji's 1994 tax reforms, but essentially land sales are an extremely important part, and property revenue in general, to the health of fiscal of local governments, counties, cities, and provinces. And a lot of that money to help fuel the property bubble and tax revenues has come partly from shadow banking, particularly after the 2009 stimulus. So when people talk about shadow banking and cracking down on risk, what they're forgetting is that there's a reason why this money's out there. It's not just because people are greedy, although that's part of it. It's not just that it's for GDP growth, although that's part of it. It's also because governments have been relying on this, and this is part of essentially the fiscal structure of China. Now, in terms of the shadow banking, now you can see here that the growth of what the official numbers that we tend to use for shadow banking now has been coming down quite significantly, and this is a very surprisingly effective attempt by this CBIRC and the PBOC to reduce risk in the financial system. And my personal feeling is the reason why this was so effective is because Xi Jinping himself was probably warned by Liu He, his economics guru, that if there was a bank failure, it would be incredibly embarrassing for China on the global stage. So I think this partly reflected a political impetus on the part of the central government, their own predilection to avoid that kind of embarrassment. Also, of course, the experts in the CBIRC and the PBOC are quite sophisticated, and they knew that if these shadow banks grew too large, that it could have a collapse, and you could have a repeat of like the American crisis. So there has been fairly significant reduction in terms of the official portion of credit that the government calls shadow lending. Now, this is, when we look at the WMPs, this is essentially what this woman in Shanghai was trying to sell me. And now, WMPs are essentially anything that you want to sell and anything anybody wants to buy. You can, and all across China, people are selling all sorts of different things from, a short-term property loan to operating cash flow for a short-term. I've interviewed people doing that. To I talked to a bunch of people in Fujian who were doing reverse mortgages on like jewelry and things like that. So WMPs can be more or less anything, but the growth rate, as you can see, has come down quite significantly. That has been extremely effective. A couple of years ago, the CBIRC made a point of trying to reduce the amount of WMPs or investment products that were sold by the state banks, and that was very effective. And then they gradually pushed that on other portions of the system. So, and that's, but we have to keep in mind that it's almost 30 trillion yuan of outstanding loans. And that is a lot of money floating around the system, particularly since it's very short term, anywhere between 3 months and 12 months for the most part. So I've been worried about this for quite some time because it's so short term and it's widely dispersed. If you have a crisis of confidence, that liquidity could disappear like this. So that's why we've seen a few times when there have been crises that the government has stepped in and forced the state banks to try to absorb that credit to prevent that kind of downturn. So it'll be interesting to track WMPs going forward, whether we get into negative growth. So far, we haven't reached that point. Now this gets into a different, kind of a slightly peripheral area, but I think it's important, and my colleagues can maybe have some opinions on this. But I think what we've seen is shadow banking is to a great degree private credit, often mediated by state actors like state banks. Anybody could sell a private investment, even if you're the Bank of China, where I used to work. They could go out there and sell it and then take it off balance sheet, and then it's basically a shadow loan. But what we're seeing, I think, in the government in general is an attempt to shift leverage from the financial system to the private markets. So even to shift it away from even the sort of semi-official organizations like the trusts, which are owned by provincial governments. They actually want the trust to get out of that. And so they love the idea of going into the private markets for the simple reason that their attitude is, as long as it's not ours, meaning the state banks or state-owned trusts, then it's safe. Now there's a whole issue about the leverage of the consumer, which I think is highly problematic, but I'm not going to get into that. That's a sort of a separate area. So one area that I was looking at, and Haibin and I were talking about this, and there's not that much data, but there's a lot of discussion about the private-public partnerships, which Beijing loves that idea because basically it means that you're essentially transferring fiscal obligations of local governments onto the backs of private investors. So when you want to build something, instead of going to the Bank of China and getting permission up through the chain to Beijing and getting that loan and then going into maybe the local government financing vehicle or some other fiscal group, you essentially say, we're going to privatize this loan. But the problem with that is that the split between the state and the private loan would be, let's say it's 50-50. So 100 million yuan investment would be 50 million from the Bank of China and 50 million from private investors in, say, Sichuan province. The problem is, from the interviews I've conducted, a lot of that stuff is securitized off to private individuals. And I'll give you an example. Agricultural bank in Anhui, I interviewed this guy about a year and a half ago. And he says that when they do these investments, they would essentially securitize almost the whole thing. So the state bank, ag bank, and the private investors would make the loan and then quickly, they put 20% up and then quickly sell off their portion. So the minute you securitize the loan and give it to private individuals, it essentially becomes a shadow loan and it's off balance sheet. And my understanding is it's no longer considered or part of official credit flows. It's not even considered part of the official shadow loans. It just becomes a form of fiscal stimulus that's out there in the ether. So if there's approximately, I think, 8 trillion. I think there was 8 trillion out of PPP. I don't know if you guys have a better sense of that. But if you figure 80% of that has been securitized, which is my estimate, and as I said, that's an estimate, that means there's 6 trillion of fiscal injections and infrastructure investment that's not being counted in any of the baskets that the official regulators put this in. Now, this is just one example of these kinds of shadow. I guess you call them shadow loans that are basically off the system. And that is helping to fuel the property bubble that Alicia was discussing, and helping to prop up developers and land sales and keep government's revenue alive, because they need that, a third of their revenues coming from these sources. Now, which sectors are going to be hurt? I mean, I fully agree that the property market is extremely dicey, and in fact, if there's ever, the shrinkage of credit that's occurring, I think is having a disastrous effect on property developers, and could easily lead to a default on that sector. And that's one reason why I think, even though the regulators are restraining what I call official shadow credit, it's leaking through other ways into the system, like the PPP, securitized PPP, because essentially a lot of developers and local governments like to keep that going. WMPs are heavily invested in the bond and equity markets. As I said, the data on that is very sketchy, so nobody's really sure where it's going, but that's helping to prop them up. And then, of course, a lot of the bonds have traditionally been bought by the banks, but there's some suspicion that quite a number of these bonds are being sold off to private investors in tranches. So that's my final slide. Basically, the point of this is that there has been significant de-risking of the financial system. And I think the regulators have done an excellent job. And if you talk to the CBIRC, I was up in Beijing 2 weeks ago, apart from the fight between the CBRC and the PBOC and the MOF, which is getting highly risky, they've been very knowledgeable about the restraining credit in the riskier parts of the market. And some of the regional banks, their asset bases have come down quite significantly. And they no longer can sell risky products at the rate that they were selling before. However, you can't shrink the monetary base too much, because you'll have a significant, well, you will have deleveraging, and I agree that there is no deleveraging at this point. And that will not only impact GDP, but you could actually start having municipal defaults, which is more or less unheard of in China. I'm not aware of any, where a government is going to run out of money and won't be able to pay off its debts to individuals, or even pay for social services. So that's why I track a lot of what I call leakage, and it's a form of shadow banking. So I always figure that there's going to be some way for these actors to figure out how to get credit out into the system, because essentially the fiscal system requires this credit out there. So I'm not optimistic that there will be significant deleveraging in 2019, and that means that the existing debt bubble is likely to maintain at current levels or even rise. So, which could be disastrous. At some point, you're going to have a defaulting situation in different parts of the system. Which parts of the system, we can debate that significantly. And I'll just end with one last point. If we talk about the trade war and shadow banking, what would the relationship be between the two? SMEs have traditionally relied heavily on non-standard credit, because the banks don't like to lend to non-state firms. If you reduce that non-state credit, and certainly there's been a decline in the amount of shadow lending going out there, then SMEs are going to be facing a credit crunch. Meanwhile, of course, a lot of SMEs are trade-related. And I noticed in Guangdong, the latest, I think it was July or August, which accounts for, I think, 29% of China's exports, the PMI there is now below 50. So Guangdong is just beginning to see the beginnings of, I think, the impact of the trade war. So there could be a double whammy. You could have a reduction of credit to the SMEs through the non-standard areas, plus the trade war, which could be disastrous for defaults in the small business sector. I think I'm actually well under time anyway. So that's it from me. Thank you very much for your time.